What's going on, y'all? My name is Eric. In today's video, I'm going to be showing you how to buy a call option in Robinhood. But before we get into that, let me explain to you what an option actually is so you guys know what you're dealing with. Options are contracts that give you the power to buy 100 shares of a company at a certain price. So you can actually buy shares of a company at a lower value than what they're currently priced as long as you have the corresponding contract to do so. So say that you wanted to buy a stock and that stock is currently $100 and you wanted to buy 100 shares. That's going to cost you $10,000. Now, say I had one call contract with this stock and it was at a $90 strike price and I exercised it. This just gave me the power to buy 100 shares at $90 even though the current value of the stock is $100. That is $1,000 immediate profit right there. Now, say I don't want to buy 100 shares of this company and I also don't have $9,000 just sitting around. That's a lot of money to put into one trade. Well, instead of exercising your option, you can just sell it back to the market. And that is exactly what options trading is. You're selling the opportunity to be able to buy 100 shares of a company at a lower price than what is currently valued at, as long as you have the contract to do so. So buying these contracts are very easy. You can do it on Robinhood. It's super quick. I'm going to jump right into Robinhood and we're going to show you how to do it right now. Okay, so here we are in Robinhood. Right now we're looking at Apple stock because it's going to be the stock we're doing a call option with in real time. I know most people are visual learners, so I figured I could show you the real deal. You can do this with any stock that has options trading available. I'm just doing it with Apple because everyone's familiar with it. So to buy an option, hit trade in the bottom right, then trade options. Boom. So now you're looking at the option screen. At the top, we have our expiry dates, which I'm going to do March 12th. What an expiry date means is you have the power to buy 100 shares of a stock up until the market closes on this date. But like I said, we don't exercise options, we just sell them. But of course, we still want to sell them before they expire. So on the left side of the screen, this 125, 126, and 127, these are called strike prices. And this is the price that you can buy 100 shares of a stock at if you have that contract. On the right side, in this little green box, this is called the premium. This is how much you will be paying per share for 100 shares. Because remember, one contract is worth 100 shares. So the easiest way to see how much a contract is going to cost is just move the decimal over to the right twice. I know it's weird, but that's just how it is. So as you can see, the current price of Apple is $125.80. Any contract with a strike price under that price is going to be worth more than anything above it. This is because being able to buy a stock cheaper than its current value is valuable in itself. This makes any contract with a strike price below the current price more and more valuable the more price rises above it. The opposite is true for strike prices above the current share price. The higher the strike price is above the current price of the stock, the less it will be worth. Because why would I pay to have the power to buy 100 shares at a higher value than what the stock is at now? I could just buy 100 shares at the current price. Well, there's a reason contracts with a strike price above the current price have value. It's the potential for the stock price to eventually rise above that strike price, making the contract's value shoot up. This is why any contract remotely near the stock price has value. It's called being in the money. The higher the potential for the stock to rise above a contract strike price, the more that contract will rise in value. And once the stock price goes above a contract strike price, the more it continues to rise past that strike price, the more the contract will grow in value. So for this example, I'm actually going to buy a contract with a 132 strike price just to show you how affordable a contract can be. 132 is a decent gap between the current share price and the strike price, but let's say I expected the price of Apple to be above or at least closer to 132 as we approach March 12th. And if it is, this contract can easily be worth more than a few $100. As you can see, this contract is worth 77 cents per share or $77 a contract. I select how many contracts I would like to buy and I hit review and then swipe up to confirm my purchase, and that's it. That's how you buy a call option on Robinhood. Thank you guys so much for watching. I really hope this video helped you out in some way. If you're interested in learning more, consider joining our Patreon down in the link below, where we have exclusive trading tips, constant market updates, access to our Discord with a live trading bot that tells you when to get in and when to get out of what trades, and access to our merchandise. Thank you guys so much.